Hey everyone, welcome to the KE Report, another daily editorial on this Tuesday, May 13th, chatting with Dave Erfle, founder and editor of the Junior Miner Junky. Dave, there's a lot for us to get through. We're going to start with the correction that we saw in gold and the gold and silver stocks yesterday on Monday. No correction really in the silver price, which I found quite interesting, as well as a pretty big deal in the silver space with Pan American Silver announcing an agreement to acquire Mag Silver. Total value of that approximately $2.1 billion. This is one of the biggest takeovers in the silver space that we have seen in years. So, Dave, let's start off with what happened yesterday. Again, we do have to point to is the fact that there's some sort of a trade deal between the US and China, and that caused US markets to move higher, even the dollar move higher, and gold correct. Gold gave up over $100, continuing to fade from that recent high of 3,500, now down about 8.5% from that recent high. And the gold stocks and the silver stocks also got hit on that. Some of the majors really got hit. I think Agnico Eagle was down almost 10% yesterday. A few other of the majors also with some big moves. It was really interesting, I think, to see the correction happen in some of the bigger gold stocks, but a lot of those were also the ones running the most. So, Dave, run us through yesterday. Your thoughts on that correction.
Yeah, it was really interesting how over the weekend we had all this positive news, especially with the trade war. The gold futures basically began the week with another triple digit move. Most of these triple digit moves have been to the upside, but this one was to the downside when US and China they issued that joint statement in the early morning hours from their talks in Switzerland. But Trump also doubled down on US domestic manufacturing after a call with Apple CEO Tim Cook, and they also hinted at progress in the Middle East and Pakistan and India. So all these catalysts that were driving the gold price higher up to that $3,500 isolated peak. We had positive news on the trade front. We had positive news geopolitically on what's happening in the Middle East and Ukraine and Pakistan and India, that new war over there. So the gold price came down and tested 3,200 again really quickly. But what was interesting was the silver price got hit down to 32 support also pretty hard, but that bounced really strongly, and silver was not down very much on the day yesterday, and that gold silver ratio moved below 100. I think that's really something that should be focused on. And then, like you said, you had the announcement of Pan American Silver offering to buy out Mag Silver. That was huge news also on the silver front. That's another big silver asset going into a major. So I think it's important to concentrate how well silver performed yesterday.
Dave, one thing we were talking about too is that the juniors didn't really get hit nearly as much as some of the major gold stocks yesterday. I find that a little concerning in the fact that I still want to see majors perform well. I think if we get this trickle down of money where the majors, their momentum slows and the gains maybe are being locked in, move down into the smaller stocks. I don't think that continues to bring in more investors. I do think a lot of investors have come in, especially to the gold space, but a lot have come into the gold stock sector. And we need that performance to continue to keep this run going. I almost worry that if money rotates too quickly into the juniors, that can be more end of cycle or a prolonged pause to this much better cycle that we have had for gold stocks.
Yeah, I understand where you're coming from. I mean, we were talking offline about how gold has now replaced stocks as the number two go-to investment for investors. And that's huge, right? Because gold has been poo-pooed by Wall Street and generalist investors for so long. But I'd also like to point out that these fund managers now they have to get into gold stocks because they see the Q1 performance of the gold stocks in relation to basically all the other sectors, especially AI, and they see the outperformance and they see the free cash flow that these stocks are generating. Now these Q1 reports are coming out. These fantastic reports are coming out. And if you take a look at the big dog, Newmont, they reported a 1.2 billion of free cash flow in Q1, and the gold price has gone up since then. So if the gold price hangs around up here above 3,200 for Q2, I think it's reasonable to say they could post 1.5 billion of free cash flow in Q2, and that's a run rate of $6 billion in free cash flow per year. That's a big number, and they've really shored up their balance sheet. Their balance sheet is very healthy now. So, fund managers have to look at that. And Citibank came out with that report a couple weeks ago with a headline, once in a 40-year gift. That's what the gold stocks are presenting to the marketplace here. So this is generalist investors, finally coming into this sector after leaving in mass in 2012. I mean, they left and have really yet to come back as investors to this tiny sector. So I agree with you as far as, there's some froth in the market and it does have to be worked off. And I think I've said this in the past. I wouldn't even mind seeing the gold price come down to test that 2950, 3000 level to work out more froth in the market here. And it looks like the miners are kind of hinting that may happen. That would be a 15% correction, by the way. I mean, it's ever since the gold price bottomed at 1600, we've had about 5 meaningful corrections, and the corrections lasted were about from a little over 6% to a little over 12%. We saw corrections that spikes down, consolidations, and then a move higher. And these consolidations have lasted less and less time because this is a very powerful gold bull market after that 13-year cup and handle breakout at 2000. So I would like to see more froth come off here. So that would mean a 15% correction would come down to test that 2950, 3000 level, and that's really strong support. And it's also the 18-week moving average is rising pretty sharply now, and that's a little over 3000. And 18-week moving average has been strong support ever since that breakout above 2000 in March of last year.
So Dave, let's talk money flows because I feel like the generalist investors that they have woken up to the gold price move. It's why we've seen so much money flow into the gold-backed ETFs. But even something like GDX, I would expect more money to be flowing into there, as many generalists do like to diversify by using ETFs in a sector. We're not seeing any really inflows in any of the past data that I've seen into GDX. But you do look at some of those major miners, Newmont, even Agnico, they have been trading higher volume. So maybe the generalists are taking more the stock risk. Could we just be in a situation, though, where investors simply don't want to move into the stocks as much as the underlying precious metal? They have leveraged ETFs to play the metal. Plus, it is a safety trade still. They're clearly worried about what general stocks are doing. Why aren't we seeing more inflows into GDX? Clearly, the major gold stocks, they are trading higher volumes at least.
Yeah, Corey, I've thought about this a lot. And I think if I'm a generalist investor and I look at the gold price, I hear about the gold going up. I'm seeing it on CNBC now, seeing everybody talk about it. Wow, look at the gold price. Maybe we should start looking at gold stocks. Well, the first, what you want to do is you want to find the biggest, most liquid gold stock out there, and it's also trading in the S&P 500. So it's safe, it's liquid, you get in, get out. That's Newmont. And you also, you want to maybe take a look at the top three: Newmont, Agnico, and Barrick. They're the top three gold producers, right? So, but if then you take a look at their charts, Agnico is the only one that's making all-time highs with the gold price. Well, you look at Barrick and you look at Newmont, and they're still well off their all-time highs, and they're not outperforming. So maybe that's making them a little cautious coming into the gold stock space. You take a look at the GDX, it's broken out of a 4-year base above 43, and it did so with a strong volume spike back in the first week of April. And it looks like it's probably going to come down to test that 43 area. Is that when I get in? And that's what the miners are telling us here. Look at the GDX. It's making a lower low here, while the GDXJ has not, the SIL has not, and the SILJ has not. Those are more speculative ETFs. So if you take a look at the GDX, it's saying to us it might come down and test the 43 level because it might be telling us that, hey, gold looks like it needs to correct more and come down and test that 2953,000 level before going higher.
Okay, that is fair, Dave. And it's the one thing, like I am on board with this is a great market. I've been saying this for almost a year now, is that this is one of the best markets, if not the best market I have seen. Now, obviously, that 2011, 2012 period, that was very strong too. But even the data that we are seeing, that Bank of America poll, even that recent poll you just referenced, that Gallup poll where 23% of Americans surveyed say gold is the best long-term investment. It's still being beat by real estate, but stocks, that only came in at 16%. And again, you look at some of the historical references to this strong sentiment, and this is sentiment towards gold. The high watermark for gold in that Gallup poll was 34%. That happened, when do you think? 2011, 2012. So this is the one thing that I'm balancing here, is that clearly this is a really good market, but sometimes tops happen in when the markets look the best. However, sentiment readings like this can last a long time if markets just continue to move higher. So it's that real balancing act that I'm battling with here, being seeing the stocks do well, especially the majors. I want to keep seeing them do well, but some of this data again is lining up with pretty historic peaks for the market.
Yeah, I hear what you're saying, but if you want to take a look at performance, the gold price performance versus the S&P 500, if you go back to the beginning of this secular bull market at the turn of the century in 2000, the gold price is up 1,078%, and the S&P 500 is only up 283%. So gold has been outperforming stocks for quite a long time before these people finally realize, hey, maybe gold's a better investment than the S&P 500. But if you take a look at the gold price, yeah, we've talked about how overbought it is and how it's due for a correction. You know, we had that isolated high at 3,500. Now we've had back-to-back reversal candles on the weekly, and yeah, it needs to correct some more. But these gold stocks, I mean, they're still cashing up. You know, they're still not even close to where they were back in 2000, 2011, as far as, you know, valuation in relation to the gold price. So as far as the gold price is concerned, maybe this is a short-term top, or maybe we get one more blast to that logarithmic target of the 13-year cup and handle breakout of 4,000 before we get a decent sized and drawn out correction in the gold price. But as far as the gold stocks are concerned, I mean, I'm looking at a lot of these chart patterns, especially a lot of these juniors. You know, they've created these huge accumulative bases at a higher level, like the GDX and the GDXJ have had, but these bases look very, very powerful, especially now that we're seeing, you know, that we're seeing M&A pick up because these, you know, these majors are making so much free cash flow, and their shareholders are clamoring for more growth now. They say, okay, you've shored up your balance sheet, you're paying healthy dividends, you're doing share buybacks. We want growth. We want to see growth now.
Absolutely. That's what I want to see too. And that's what I think draws in even more investors. More M&A, get that money cycling. That's what brings in even more of these generalists into the individual names. So again, this market still looks very strong. We just need everything to keep falling in place here, even during these corrections, which fair enough. We are due for a correction for this sector. Let's talk about that M&A then, because Pan American Silver buying MAG for $2.1 billion. Again, the biggest deal in the silver space in quite a while. The most recent large deal was Silvercrest deal when Coeur bought them for 1.7 billion. This was a mid-tier. MAG over $1 billion is considered a mid-tier. There aren't tons of mid-tiers in the silver space. Is this, do you think, going to be a trend where we maybe see some more consolidation of the large cap silver stocks trying to scale up?
Well, you know, these companies, they realize that these silver assets are very rare. These high grade silver assets are very rare. And this takeover came on the heels of Pan American announcing revenue of 773 million that is up over 28% year over year. And as far as their earnings per share, they beat expectations by a whopping 21 cents. They announced 42 cents earnings per share, and they beat it by 21 cents. Lower costs, higher metals prices, and they made 112 million in free cash flow. And their cash at the end of the quarter was 923 million, and they spent over half that cash. They intend to spend over half that cash to take over MAG. So it's a cash and shares deal. So it's a very good offer, and they also took it out at made an offer 25% below MAG's all-time high back in 2021. So they're only getting 44% of the Juanicipio mine because it's controlled by Fresnillo, the operator that owns 56%. But this thing is a cash flowing monster, and the property's only 10% explored. And the silver equivalent all-in sustaining costs are less than $11 an ounce. So these companies, they see these opportunities for growth to take over these ounces on Bay Street as opposed to trying to grow the ounces themselves. And they're taking advantage of it. And I expect it to continue. And especially, in the silver space, first we saw First Majestic take over Gatos. Then we saw Core take over Silvercrest. And then recently we saw Endeavor take over that Peruvian miner, Minera Culpa. So now they've got a producing mine in Peru. While the Terra Nora project, they had just announced a wet commissioning, and they're going to be going into commercial production by the end of the year, and their cash costs will be cut in half by this mine eventually. So, they see the writing on the wall. They see that the silver price eventually will catch up with the gold price. I mean, so the silver gold ratio at 100 to 1, that's happened 2% of the time over the past, 50 years. That's rare. And they know that silver price will eventually catch up with the gold price. So they see the opportunity in the silver space, and they're not wasting it.
Good. This is what we want to see. More deals happen, and it really reminds me of all the mega deals that we saw in the gold space a few years ago now, and money eventually filtering down. I know a lot of people still waiting for these mid tiers to make some acquisitions, but hey, all M&A is good. So Dave, what are you looking out for then? The rest of this week, sort of the follow through on that correction on Monday. Any data, any market moves that you think are most important to follow?
Well, the CPI data came out today, and the CPI is still at 2.8%. That's pretty far above the Fed's fantasy 2% target, while the GDP growth in Q1 was less than 2%. And unemployment, which is a lagging indicator, is the last domino to fall as far as unemployment getting stronger, meaning employment getting weaker. So the Fed's already basically setting us up for a stagflationary scenario here in the economy. So the gold price is really looking at that also. So the gold popped a little bit today on that news, on the CPI news, but there'll be PPI news tomorrow. But like I said, take a look at the miners. The miners will tell you where the gold price is going. And it looks like the GDX is telling us the gold price is probably going to lose that 3,200 support. It's tested it twice now. And the third test will likely be a breakdown, which is what, like I said, the miners are telling us. But as far as opportunity is concerned, that's just an opportunity to add to your especially your junior positions, because these junior stocks are really starting to outperform, and several of them look very explosive coming out of long-term cumulative bases.
Yeah, I think you're right. Watch those stocks when you're in the gold space because even today, with the rebound in gold and silver doing pretty well, all those ETFs are pretty flat, even a little bit in the red. So the stocks are telling us that maybe a bit more of a correction is ahead of us, which, hey, in all fairness, a lot of people have been calling for that. Dave, we'll wrap it up here, man. We got through a lot, but there's a lot to talk about in this sector and the volatility that remains across the board in the financial world. Again, Dave Erfle, founder and editor of the Junior Miner Junky. Click that link in the show notes to follow along with Dave. Dave, thanks for your time, man.
Thank you, Corey. Always a pleasure.